Palantir, PLTR stock, just reported their first quarter 2024 results. And when I look at the historic financials and the most recent quarter, this is all available for free at AI Ticker Chat, at least the historic financials are, you can see that their revenue growth in the most recent quarter accelerated. Their profit margins exploded higher, and their diluted share count also increased significantly. So broadly, I like to see this story of strong growth, exploding profit margins. I don't care for the continued share growth, but that's been a problem and a challenge that I've called out for a while now. As we dig into the results, you see U.S. commercial revenue accelerating 40% year-over-year growth, 14% on a sequential basis, closing over 87 deals in the quarter worth over $1 million, and their GAAP profitability. So for all those folks saying, hey, they're making all those adjustments, yeah, not even factoring in stock-based compensation. So including that as a real cost, which it is, they're saying, hey, we are at 13% profit margin. So I look at this, there's a lot to like here in Palantir. We're going to talk more about the results. What do I think about it? Why is the stock selling off right now? If this is your first time tuning in, my name is Daniel. You're watching Unrivaled Investing. Let's dive right in so you can understand what's going on with Palantir. And so, not only did they report improved results, strong results, I'd argue, but they're also raising their outlook for the year, talking about around $2.7 billion in revenue for the year and around $1 billion just shy in free cash flow for the year, between $800 million and $1 billion. And that's a key metric to think about. We'll cover that in a second. So that does include significant stock-based compensation. But looking at this, you're talking about around 20% growth, a lot of free cash flow, strong balance sheet. These are things investors like to see. And yet the stock is down, a couple percent after hours. It did ramp up significantly during the day. It's up significantly since it bottomed a little over a year ago, where it previously was trading around $6 a share. Now it's around $24, $23 a share. So why is it selling off following what is arguably strong results? So let's go through the fundamentals, and then we'll talk about why the stock might be selling off, because it's interesting. On the one side, you see Alex Karp talking about we crushed it, like Palantir crushed it. It's crushing the U.S. results. And at the same time, the market's like, not so much. And so let's look at this. Is this just Alex Karp being overly promotional, or is this an aspect of there might be a reason why the stock's going lower? Looking at the actual fundamentals, the details that management provides, this is incredible what they're showing in U.S. commercial side, talking about that 40% year-over-year growth, talking about number of deals closed up 94% over the last 3 years, 3-year U.S. commercial customer count growth up 12x, U.S. commercial remaining deal value up 74%. So no matter which of these metrics you're looking at, very strong U.S. commercial growth, very strong representation here. And they're showing strong customer quotes, saying, look, they've done a number of AI platform boot camps. And that's been, I'd argue that's become the main platform that they've been sort of pounding the table on. And the reason why this is important is they're saying, hey, look, AI isn't just these large language models that, you can maybe use as a chat bot for your company, or maybe you displace customer service, but it's real logic. And you could even argue that the models could become commoditized, which I really actually enjoyed hearing that commentary on the call, because it aligned with my own thought process that there is this sort of race to build the best model. And if you're not the best, you're otherwise commoditized. But it's the real value is in the application layer, which is how do you make sure this model is correctly looking at the data and coming to helpful conclusions for companies. So for example, they talk about we're saving about $14 million annually, and it's only deployed to a part of our network. This is from General Mills. You have other companies talking about how Palantir has changed the perception of technology delivery, how fast you can deliver these technologies. And they gave several quotes or references on the call just about how it's not just a chatbot, it's about impacting the entire business. And I'd argue Palantir is in the right place at the right time, not only from a technological perspective where they're, eager to roll out their AI platform, but providing the tools for Western governments, where, folks are saying, look, let AI remake the whole US government, and save the country. And you see, the first AI war. This is really fitting into Palantir's sweet spot of leveraging these tools to help Western democracies. And I'd argue some of the biggest challenges that the U.S. government faces, for example, like just overspending, having an AI go through the budget one line item at a time and say this, call it out, and have an AI willing to do the work that, let's say, armies of people would struggle with, could be revolutionary over time. So I'm excited to see their tools get rolled out and hopefully help the U.S. government and its spending. So it's not only about warfare, it's about, from a commercial perspective as well. That said, they do seem to be, holding their own and winning new contracts from the U.S. government. And, from a warfare perspective, where, they talked about how during the first quarter, they won over $178 million contract for Titan, which is a deep sensing capability truck. And during the call, management called out that this was actually fairly special for them to win this contract, because it's not often that you see a software type of company winning hardware related deals. So if this, changes into not only a software pioneer, but a hardware player as well, maybe you see another dynamic as well where people say, wow, they're bringing to market tools and, equipment that others just aren't. I've privately, looked at Anduril as just, a very interesting company, where they're talking about making autonomous jets and things like that and winning these massive contracts. So is it possible that Palantir starts moving into the specialized hardware space as well? That's a very different business model, keep in mind, but that can be extremely lucrative, as we know from looking at the folks of like Lockheed and such, these legacy sort of incumbents. So the question is, well, where does Palantir go from here? Why is it selling off? Talking about those dynamics. First of all, in full disclosure, I do not have, first of all, this is not financial advice. I don't personally have a stake in Palantir. At this time. Also, quick plug, recently A. Woods, a premium member of the Unrivaled Investing community, commented that thanks to Unrivaled Investing, this is a direct quote, "I'm currently ahead of my investing goals to retire at age 45. This follows another subscriber who recently added the unrealized profits," and he mentions two different stocks that I've called out to my subscribers, "is enough to cover 302 years of membership." That's what I like to hear. And so if you're interested in compelling investment ideas, come check out unrivaledinvesting.com. I do expect to be raising prices for the premium tier later this month. So lock in the favorable pricing now. And so looking at Palantir, using the premium features at AI Ticker Chat to understand, the quality of this business, using Scorecard, a recently launched tool, the reality is Palantir is increasingly turning into a higher quality company. The quality of the business is improving. You see it across their financial health, their market position, their outlook, management's alignment. I'd say the quality of the business is improving. And you even see management, management has never been shy in terms of talking about how great they are. And I'd argue they did it again on the most recent quarter, saying, look, I don't believe we have competitors. So I don't believe in the U.S. market, in the commercial market, we have competition. I don't believe in the U.S. government market that we have competition. He talks about, I think that's the reason Ukraine and Israel brought our product. We are differentiated because in order to actually make AI work, you need an ontology. And so it really talks about, if you're just trying to create a chatbot, that is going to be commoditized. But if you have the data infrastructure to be able to aggregate this information, actually use it, and then apply artificial intelligence insights, then you have a different type of business model. And he's saying Palantir has the tools to make it work, and not everyone else does. And when I see management say, look, from our perspective, the reason why you're seeing this acceleration in our commercial business is because we are closer to being unrivaled. We don't have those competitors. I do like to see that. And that does fit with the quality of the business improving. And I think the AI platform is a very big deal for Palantir. The question is, okay, so Daniel, you're talking like why Palantir looks great and why these things, obviously have been working out, but why is the stock selling off? Why is it down a bit after hours? And I think it comes down to this key point, which is that valuation matters. It's not only the free cash flow, which is improving at Palantir. It's not only the fundamentals, which I'd argue are also improving at Palantir. That third component, that three key drivers of returns, valuation is a big one. And I'd argue investors possibly have gotten ahead of themselves when they're looking at Palantir, because now it's around a $56 billion company. And keep in mind, management is guiding to $1 billion in free cash flow. So $1 billion free cash flow, $56 billion valuation. So 56 times forward free cash flow for a company growing 20% sales. That, and keep in mind that 20% sales is actually much lower. They're not going to call this out. This is why you have to do your own, think about the numbers. And I'm glad to share my own personal thoughts with you, is that you need to look at it on a per share basis. And when you adjust for the increase in diluted share count, that growth rate is only closer to, like, let's say 12%. So 50 plus times free cash flow for a company growing, let's say, somewhere between 10 and 20% a year. That's certainly a lot less compelling. I personally have called out companies that I've personally bought. I've called it out to my subscribers at Unrivaled Investing in the last few months. Easily, you find things where you see the same level of alignment. You see, same level of balance sheet strength, same conviction that it's unrivaled, but actually growing on a per share basis, let's say over 20%, and trading closer to 20 times free cash flow. And when you see something, or even lower, and so when you see something like that versus this, you can understand that Palantir is trading arguably at a very rich valuation. And that is the big challenge that I think investors face right now, is that even if you have a quarter that crushes, like Alex Karp suggests, the challenge is that these growth rates that I'm assuming, and this is a hypothetical framework, of course, stock price can go way higher, way lower. These growth rates are on a per share basis, which is significantly faster than where the company is right now. So they would need to accelerate significantly just to get to this, this level of growth on a per share basis. And, penciling out, let's say 18% growth on a per share basis, 25% profit margins. I'm giving them a lot more credit in terms of profit margins than historically, because I'm very impressed that they managed their costs much better this quarter, getting to 13% profit margin. So I'm saying, hey, maybe they can get to 25% in the future. 18% growth, 25 times earnings 5 years from now gets to 50% downside. So that is sort of an ugly sort of downside scenario. So if you're a bull in Palantir, you're really saying, hey, I think it could do a lot better. Overall, I look at Palantir and I think this is a AI winner from the fundamental side. And I think you are going to continue to see their fundamentals improve, free cash flow improve, top line improve. But just because you have the fundamentals doing well doesn't mean the share price will do very well in the years ahead, because valuation matters. And if you overpay for something, you can have a period where the fundamentals are going up, but the valuation's coming down, resulting in ugly returns or, treading water for years to come. I hope this video talking about Palantir, PLTR stock, has been helpful for you. If so, please make a point of hitting that thumbs up, hit that subscribe button. Thanks so much for tuning into Unrivaled Investing.